SoFi. Let's get stuck in.
Someone deposited $280,000 into the neobank with a national bank charter. $216,000 was frozen. 10 months later, still frozen. No timeline. The industry authority fined the companies $500,000 for misrepresenting securities lending terms to over 2 million investors. The founder resigned after sexual harassment allegations. His replacement named a stadium after the company before it turned a profit. It sued the government, claiming the student loan pause cost it $300 million. It withdrew the lawsuit 3 months later. As of this week, customers must pay $10 a month to access the savings rate that made the product compelling. Without it, the rate drops to 1%. Record profits, $27 billion in deposits, the most legitimate neobank structure in the country, and a paywall for the feature people signed up for. The company was founded in 2011 by a group of business school classmates. The founding product was student loan refinancing for elite university graduates. The insight was that graduates from top programs were low default risk borrowers, paying interest rates set for the general market. By offering lower refinancing rates to this specific group, the company could earn the spread while saving borrowers money. It worked. By 2017, the valuation reached roughly $4 billion, the fastest growing consumer financial company in the country. In September 2017, the founder resigned following sexual harassment allegations. Multiple media investigations described a culture of tolerated harassment. The board had been aware and moved slowly. The founder settled with the complainant. No criminal charges. He later started another company. The replacement chief executive came from an unusual background. Military academy graduate, former chief financial officer of a major sports league, former operating officer at a major social media company. One of his first moves was naming a stadium in Los Angeles after the company for roughly $40 million over 20 years. A significant marketing spend for a company that was not yet profitable. In 2020, the company acquired a banking infrastructure provider for roughly $1.2 billion, giving it the technology that powers other neobanks from behind the scenes. In January 2022, it received a national bank charter from the banking regulator. The first major American fintech to hold one for a consumer-facing bank. Direct deposits, direct insurance, direct regulation. An actual bank. The charter meant deposits are insured directly, not through a pass-through arrangement with a partner bank. Loans are originated on the bank's own balance sheet. The regulatory oversight is more intensive than what applies to a technology company sitting on top of someone else's banking license. But what happened to customers at this actual bank tells you that a charter does not prevent the same problems every neobank faces. $216,000 frozen from a $280,000 deposit. 10 months, no resolution. At a federally chartered national bank with its own regulator. A veteran's account was hacked. 41 fraudulent transactions, totaling over $7,500. Benefits payments were redirected. The dispute was denied because the documentation submitted on behalf of the incarcerated account holder did not meet the company's requirements. A customer woke up to find their SoFi savings account containing over 6,000 closed without notice. Representatives initially denied the account existed. Multiple complaints document this pattern where phone representatives tell customers their closed accounts do not exist, which is a particularly alarming response when you are trying to locate your money. A $7,000 retirement rollover was frozen immediately upon deposit, unfrozen the next day, then refrozen the moment the customer attempted a transfer. 10 weeks of daily calls, representatives hanging up. In December 2023, the industry authority fined the company $500,000 for misrepresenting its securities lending program to more than 2 million investors. Communications told customers fees would not apply in situations where they might. The supervision systems were inadequate to catch it. In March 2023, the company sued the government over the student loan payment pause, claiming $300 million in lost revenue. A policy that was allowing struggling borrowers to avoid payments during the pandemic was costing the company money, and it chose to litigate. It withdrew the suit 3 months later after the broader cancellation plan was struck down. A consumer protection organization filed a complaint alleging the company misused the deposit insurance logo on products that were not insured. No enforcement followed. But the products and the paywall that arrives this week tell you where the company is heading. The product breadth is the widest of any neobank. student loan refinancing starting at 4.49%, personal loans from 8.99% to 25% with origination fees up to 7%, an investment platform with zero commissions and fractional shares, a credit card offering 2% cashback with no annual fee, checking and savings in one account. The savings rate with a qualifying direct deposit is 3.3%. Without it, 1%. The promotional rate for new accounts through the end of March is 4%. From March 31st, 2026, customers must pay $10 a month for a membership to access the 3.3% rate. Without the membership, the rate drops to 1%. For a customer with $50,000 in savings, the difference between 1 and 3.3% is roughly $1,150 a year. The membership costs $120. At that balance, the membership still makes sense. Below roughly $5,000, the calculation reverses. The company that marketed itself as fee-free banking is implementing a subscription for access to the feature that most customers chose it for. The community reaction has been significant. The financials tell a different story from the complaints. Revenue in the fourth quarter of 2025 hit $1.03 billion, up 37%. Full-year net income of $481 million. Profitable since the fourth quarter of 2023, $27 billion in deposits. The infrastructure division powers other neobanks and fintechs, generating over $120 million in quarterly revenue. The chief executive purchased roughly 500,000 in shares on the open market in March 2026. An insider buying signal made weeks before this research. The stock sits at roughly $7, down significantly from its peak above $25 billion in market value. But the verdict depends on whether the paywall changes who this product serves. SoFi is the right choice for the young professional with student loans, investment accounts, and multiple financial products who wants everything in one place. The bank charter provides direct deposit insurance rather than pass-through coverage. The product breadth is unmatched among neobanks. The credit card at 2% with no annual fee is competitive. The investment platform offers zero commissions with fractional shares and cryptocurrency. The record profitability and growing deposits suggest the business model works at scale, but SoFi froze $216,000 for 10 months at a federally chartered bank with its own regulator. A veteran's fraud claim was denied, an account with over 6,000 was closed, and representatives denied it existed. The industry authority found it misrepresented securities, lending terms to over 2 million investors. The founder resigned for sexual harassment. The company sued the government over a policy that was helping struggling borrowers, then withdrew the lawsuit. And from this week, the savings rate that made customers choose SoFi costs $10 a month. Check the membership maths before you deposit. If your savings balance justifies the $120 a year, the membership makes sense. If not, competitors offer higher rates without a subscription. Do not deposit large, unusual sums without expecting a review that could take weeks or months. The documented resolution timeline ranges from days to 10 months. Have a backup account at a separate institution. The charter is real. The profitability is real. The account freeze pattern is also real. The safest neobank is still a neobank. And this one now charges for the privilege. The charter changed the structure. It did not change the pattern. Every choice is a trade-off. At least now you know what you're trading.